Hey, April, very good to see you. Today we have a really important topic, protecting your money against a bear market based on your age. The S&P's recent decline into bear market territory has taken a chunk out of everyone's retirement accounts. So I think a lot of people are asking, should we sell? Should we buy the dip? But of course, that advice is going to be different depending on your age. But generally, if you have a long time horizon, buying the dip can pay off. So is that your advice to younger investors?
Sure. Well, it's so hard to give blanket advice. But yes, if you're young, this is an opportunity in particular to take advantage of this volatility. Your time horizon is longer. There are a lot of buying opportunities right now with asset classes that are down 25, 30% or more.
Mhm.
And of course, we don't know exactly where that bottom is, which is why buying a dip makes a little more sense for somebody who is in a longer time horizon than those who are not. But they do have the ability to withstand some additional volatility if indeed we're not near a bottom. And a long-term investing strategy, it's certainly important for younger investors to take advantage of this and the time value of money.
hmm So now let's talk about retirees or pre-retirees. They are in that decumulation phase, and retiring in a bear market must be so stressful. I'm just going to pull up 10 of the worst bear markets. This doesn't even include 2020 yet, but what is the advice for them, for that group?
Well, it's interesting right now because primarily what we're hearing is stock market volatility.
Right.
And that's what we're looking at here. We're hearing more about stock market volatility than we are about bond market volatility. So
hmm
we have to be careful to make sure that we're looking at both because a balanced portfolio right now, you'll see the high level of volatility in the equity market here, but you also have to be cognizant that the bond market is doing very poorly this
hmm
year as well, down in some instances 15-20% midway point in the year. So if we're using a traditional asset allocation, a buy and hold strategy, a 60-40 split, however it is that we want to define that, and we're relying too heavily on the bond market, which is what a lot of more conservative retirement minded investors do, then we have more exposure right now than most people are going to be comfortable with. So
Right.
in a period of time like this, where we see stocks and bonds both trending negatively over a longer period of time, it's really important that we begin to look at some alternative investments to be sure that we have a chance to keep pace with inflation and that we're not overexposed to that volatility on either the stock side or the bond side.
Right. So let's talk about those alternative investments when we talk about bond alternatives or guaranteed incomes. Is annuities, is that a good option for people?
They certainly can be, not a fit for everybody, but they are becoming increasingly popular in this interest rate environment because there is no downside. They're with a fixed annuity. Variable annuities are different, fixed indexed annuities are different. There are a lot of types of annuities and pros and cons that come along with them, but particularly with the decline of pensions, with the lack of pensions that are available for today's retirees and for those who are coming behind them, it's very important that we allocate not only for taxes, as we've talked about a lot, not only the proper investment diversification, but also that there is an income plan in place, which
Mhm.
is in tandem not only with how your assets, how your life savings work with you and for you, but also with your Social Security income as well.
Right, right, right. I'm glad you brought that up because I do want to talk a little bit about that. As retirees try to determine whether to tap into their 401k or their Social Security, should they be considering a Social Security bridge?
It's a really good alternative for a lot of people, especially
Mhm.
right now while the market is down significantly. There are a lot of factors, however, that go into deciding when to file for Social Security. We have to think about things like survivorship income, because the income that we start, if we're talking about spouses, the income that we start is the income that we're in essence locking in as survivorship income for the spouse who lives longer. So there are some implications there, of course, of filing earlier that have to be considered, but certainly a strategy to visit at a personal level if you are retiring during this bear market period.
Mhm, mhm.
Absolutely.
And I know that that is a very complicated equation. It's not very straightforward. So if somebody has questions about everything that we've talked about, the guaranteed income, Social Security, what's the best way to reach you?
You can reach us any time of day on our website at theretirementfamily.com, or you can give either of our offices a call and we'd be happy to help.
All right, perfect. April, thank you.
Thank you, Erin.